Good morning. So the theme of the panel is really, kind of quality over quantity and big ticket versus small sizes. But what we intend to do is cover various aspects. I think we have a wonderful panel here. Manish is an entrepreneur. Sanjay and Anand. Sanjay, I know you do late stage investments as well, but both of them are prolific angel investors. And Sandeep is a institutional investor. So what we'll do is maybe we'll just start with brief intros. I'd love if panelists can take a minute or two to talk about their focus areas and what they're looking at in 2017, from an investment perspective. Start with you, Sandeep.
Great. Thanks. This topic of investing and money and is there too much, is there too little? It seems to come in cycles all the time. Yesterday I had a conversation with a reporter who said that now companies are no longer, our employees are no longer excited to join startups because it's risky. It was always risky. And I think that it's a long-winded way of getting to the introduction, which is I've been here for a very long time. I've seen a lot of these cycles. Been here since 2005, investing in early-stage consumer tech businesses. We run a fund called Lightbox. Our focus is early companies. We go in usually as the first institutional money, and we spend a lot of time working with the businesses. And some of our early investments include ClearTrip, InMobi, InfoEdge, MapMyIndia. Our more recent investments include Fasos, Droom, Furlenco. So we've kind of emerged across a new area of things, which I'm happy to talk about as we go. But it's a good topic. It's one that I can very much see us 18 months from now saying, isn't there too much money in the market? Isn't it all gone crazy? So it'll be interesting.
That's great.
Good morning. As rightly said, the investments in startups and early stage companies have their own cycles. And whenever there are excesses on either side, it tends to correct itself out. In the years 2015 and 14, 15 and early part of 16, there was too much of liquidity and money flow and so forth. So the valuations and the were all going up as if there is no tomorrow. But now things are coming more to senses. So investments are still happening, but on a more cautious note and on a real, asking the real questions about businesses. Because in the end, the businesses and the startups, they have to make money. They have to earn profit. So the only investment and burns have to be questioned. So this is what the scene looks like at this stage.
I've been an angel investor, and prior to that being an entrepreneur, so I've seen across multiple life cycles of how businesses have been doing across with various stages of investment and have seen a couple of good exits. What I'm looking across in 2017, I'm extremely bullish. I already have good pipeline and closed 2 investments early this year. So I'm very hopeful because entrepreneurs who are now coming out with the raise are with the right set of numbers, focus, revenue, profits. It's all about saying that how do I make a long-term business rather than just being a gold digger and trying to ride the wave kind of stuff and take the capital to see how valuations can be jacked up. Rather than the discussions are more saying that I'm looking to build a business and can you help me with the capital? And in turn, from an angel investor perspective, what we look into it, if an entrepreneur is coming across with the right set of frameworks, it is easy to help them get multiple rounds of funding, with their business models. So I'm extremely bullish with this new sentiment, which is prevailing with venture capitalists who are doing across the next round of funding and the entrepreneurs who are coming with right frameworks.
So I can speak both as what I think investors are thinking and what I think entrepreneurs should do. I mean, I think I think most investors, at least for the next few months, will be focused on, helping their portfolio companies do well. And so I don't expect a lot of new sort of investments to happen. I mean, just like, Sandeep mentioned, he works very closely with his companies, and it's something that I've had some pleasure of interacting with him. So, I think most investors would be very, very focused on working with their existing portfolio and ensuring that they succeed in 2017. I think similarly from an entrepreneur point of view, and maybe this was the advice Sandeep gave me about a year ago. I think focus on what's core of your business. I would say 80% of our time should go on to continuously enhancing the core of our business. If the core of our business does well, there will always be money available to experiment with new ideas. But if the core is not doing well, I think you're in some sort of trouble. So I would just say, focus on your core. Think if it's your money and not an investor's money, and deploy it as cautiously as you can.
Sure. Thank you. In terms of we know, in 2015, there was a lot of capital that went into startups. 2016, we all know, was a bit of slowdown. I think the numbers were 4 billion plus in 2015 and $2.5 billion in 2016. What's going to be like in 2017? Sandeep, I want to come to you. I mean, if you really look at a lot of funds have gone and raised capital. You've seen several funds raising $200 million or more. And then there are also a new category, the seed pre-series A category. There are a lot of funds who have raised, 30 to $50 million. So the question is, in terms of from entrepreneurs' perspective, they always think that there isn't enough capital available. And from an investor side, we always think there's more capital than quality deals. So I want to hear your thoughts in terms of what do you think? Like Manish is saying, or VC is going to be busy managing the portfolio, or looking at new investments?
So some people in the audience came by our office yesterday, and so this might be a bit repetitive for some of them, but the point, we've dealt with this so much now that basically if you look at what happened, a fair amount of capital over 3 years went into models that were built off of ideas that had started elsewhere. So the X of India, the Uber of India, the Amazon of India, the Alipay of India, the Picket of India. And a fair amount of that money, almost 99% of it, came from people who were outside of India, looking in. And so they made bets with the view that those models were interesting in other markets. India's a big market, it should have one of those. And I think that was a reasonable idea. It didn't necessarily account for the vagaries and uniqueness of India, and some of those businesses will need to find their way to figure out what their long-term differentiated proposition is going to be. But that's what drove that massive growth in capital coming in. So when you look at what came out in 2016, exactly like you said, actually, the early stage universe is relatively okay. People like yourselves, other funds have come about and said, you know what, I believe in the long term. Look at the nature of our funds. They are 10 plus years. We're not going to solve the problem of changing consumer behavior in an 18-month period and make our decisions based on 18 months. What we're going to do is believe, do you have a core product differentiation? Do you have something that makes sense? Do you have a need that a customer cares about? If you actually think about some of these businesses, we shouldn't have to spend ridiculous amounts of money continuously reacquiring customers. I accept the idea that you spend money on marketing to build awareness, and discounts are a fine way to build awareness. It's one of many. Do it that way, no problem. Once you've done it, retain the customer, because your proposition should be so amazing that people stay. And if you have that, then I think there remains money in the market that's very excited in building those businesses. Us as a fund personally, we make a handful of investments, so we won't change that pace, increase or decrease. It'll continue to be constant. I think the challenge will be for businesses that were predicated on the idea that there was a bunch of people outside who want one of those here, may have a harder time unless they can articulate a proposition that clearly outlines how their business will be sustainably differentiated.
No, I completely agree with that. I've had the opportunity to work with Sandeep at Clear Trip Days, and your philosophy has remained the same. I mean, in the sense, loyalty and NPS, and even if you spend some money on customer acquisition, eventually the lifetime value has to be phenomenal for business. And so I know that a lot of companies have invested in terms of strategy growth at any cost, but eventually, if you don't have a business model that's going to make money even after foreseeable period of time, that's going to be a very, very difficult thing. I want to switch to Sanjay. I mean, Sanjay, we've seen 90% of the capital, in 2015, 2014 went into consumer deals. And, we're now seeing, obviously, a lot of investors interested in enterprise companies, not only SaaS companies going after India market or AI, ML, applications of AI, ML in particular vertical. So what's your take on, in terms of the money, going after enterprise opportunities? Do you see that happening, or you still see that, the consumer bets are the big bets?
For me personally, I always will have a bias on enterprise tech coming from that background. But what happened in past, where consumer stories were getting funded, were purely because the whole hype in terms of saying that internet is going to be the way things are going to be, where it was saying that we have the infrastructure and it's just exploding, and everything will be bought, experienced on internet itself, which predominantly started it with this funding, but it didn't last long. While enterprise is solving the basic problem, unless you got revenue traction, it's like enterprise play is real. You don't need to really create so many categories to prove yourself. So in that sense, enterprise is much more safer play than the consumer side of the story. And I believe that enterprise is continuously going to grow. The potential where consumer side story is because of the non-linear growth. It provides tremendous amount of non-linearity if the model strikes right, the product fit works across, and we can see market also playing across usually in favor of this kind of consumer non-linear model. So for example, Paytm and the wallets were the biggest beneficiary of demonetization, where they suddenly had a non-linear curve of growth which was not even expected. So those kind of consumer stories typically are not possible in the enterprise space. Enterprise space will be linear growth which we can expect across, but it's much more predictable, much more, it's a defined universe. So engagement, or from an investment perspective, if you understand the technology well, it's rather easy to take a bet.
Yeah, Sanjay, I mean, I kind of agree and disagree with that. I think, if you really look at Cisco paying $3.2 billion to AppDynamics or Nutanix IPO, and if you really look at IPOs of Box or Cornerstone on Demand, a lot of SaaS companies have had very non-linear multiples, right? I mean, the growth can be humongous in a consumer play, but in the end, what is it that you realize for yourself as a business or your investors is going to be very important.
So, Sateesh, my whole perspective is, I don't do investments outside of India. My perspective is purely Indian. In India, IPOs are non-existent.
So is Valley. I mean, actually, if you really look at number of public companies, there were 8,000 in 2000. There are only 4,000 public companies in US right now. Yeah. It shrunk by 50%. We'll come to that. What I mean to say is that even the enterprise companies in an Indian context are going to build value. I think it's just a question of who will prove those case studies, who will be the first ones off the block, and who's going to create that value.
Absolutely. I would be more than happy to have my portfolio going with that But Indian corporates from Infosys, TCS, they don't buy companies like what Valley companies do. They don't invest into Indian IP. So I've got a huge grudge in terms of all this large IT services company not taking the Indian startup under their wings.
But the buyers will not be IT services companies, from my prediction, because these are product companies, and so it's going to be the global guys, who are either looking for products or who are going to look for go-to-market or market entry. Yeah,
Actually, I struggle with this as well because we've remained on the consumer side. And every time I've thought about the B2B side, the fragmentation that exists makes it really interesting because you sit down and you say, there's 50 million SMEs, these guys need scaled solutions, something's got to work. But the hurdle that we've seen so far has been no good solution seems to work across their disparate industries in any functional area, and no single customer becomes large enough at the start to cover your operating costs effectively enough to allow you to scale the long tail. And so somehow that's why I find a lot of these B2B companies or SaaS companies say, okay, we're going to do this, they try here, and they actually find, you know what, I could sell this in Europe pretty easily. I could probably get into America and get a little bit of traction there, and they start to do that. And quite honestly, more power to them, because I think if they grow the business that way, maybe over time that gives them the scale to come back and address the 50-odd million here. But then that's not really playing the India opportunity per se. That's leveraging skill sets that we have here. And I think that might be the way this industry develops. And I think it's absolutely reasonable and fine. And perhaps finding the guys that have that technical capacity and sales ability abroad is really attractive.
Yeah, no, definitely to go global, I mean, you need to know the customer, you need to know the product, market fit. Obviously, you need to be able to market, spend a lot of marketing dollars and compete against the mainstream companies. I mean, we'll get into that aspect. I want to switch gears and move to Anand. Anand, why don't you, it was very interesting, you've made roughly, 95 angel investments, and, you talked about 3 exits, 4 or 5 companies raising $10 million or more, from your portfolio. And what was interesting was they said 20% of them do really well and 20% of them don't do well. And it's really that 60% what you're working on to move to the extreme right so that you become successful. So you want to share some of your experiences and what you're looking for this year. If there are people out there with concepts and ideas looking for the first check, how do they approach you and what interests you?
Yeah, actually my interest and my journey into this startup investment is unlike my other friends and colleagues here, my co-panelists here. I come from what is called a regular business environment, having established my own company of flavors and fragrances, manufacturing and exports, way back in 1984. And then by chance, somewhere in 2007-8, I came across this early stage startup investment. And from the beginning, I started liking it. Basically because of, it was non-financial actually. It was more due to the dreams and the stories of the entrepreneurs and the guys, young guys. So I said, meaning it stuck to me that something will happen. And this was the time when the startups and all these were not the very catchy words. I had never heard this term burn before this my investments. So when they started talking of burns and this and that, so luckily I was in a group. So it started with Mumbai Angel, Indian Angel Network, and then friends like all of us, we started investing. And I never realized that it has become almost 95 companies so far, meaning investments. But luckily the ticket sizes are not that great. My experience has been mixed. In the sense that about 15, 20%, 20% of them have done well, either good or very good, or some of them stars or superstars. And an equal amount, maybe about 20% have completely, either they are died, they have died, or they are on the verge of, so they have started, meaning that they don't respond. Many entrepreneurs, just they forget about you. But then there is a large number in the middle, 50, 60% of them. They are all right, okay, but as investors, and the number of years have happened 6, 7, 8 years, 5 years, meaning all those years, and then they are neither here nor here.
Living dead.
Living dead, as you rightly said. So what to do with them? Then this is a continuous challenge that since we invest in a group, so the directors and the leads have to take interest and do the, but after some time they also get tired and fatigued. So all these things happen. But I have still not lost the hope, because occasionally, once in a while, some star is born out of these. And I'm still very hopeful. The only thing is that these excesses from time to time, whether by way of too much of hype or too much of valuation or too much money following the young guys, that will naturally get corrected. And it is already, I see for the last 8 months, 1 year, 1.5, that things have more stabilized. And now, as he rightly said, that we are in meaning upward cycle, in the sense good deals are now on the horizon, and with the reasonable valuation and the chances of success even more. So I'm actually very hopeful of this space going forward. I can say this.
Manish, switching gears, you're running a consumer startup. Of course, you've raised $5 million, and so what's your approach currently? Given, as you rightly said, probably there's some slowdown and investors working on their portfolio or massaging their portfolio. So, and consumer sector investments slowing down. So, what's been your approach, and what's your advice to some of the folks in your shoes out there?
Honestly, I mean, as I said earlier, I think focus on your core. Ask yourself really tough questions. Why do you have a chance to survive? And why do you have a chance to thrive? So don't avoid the elephant in the room. If the writing is on the wall, it's on the wall. So just work towards lowering your consumer acquisition costs, increasing their LTV, figuring out multiple ways why should they transact with your core business and not with ancillary businesses that you might start over a period of time. And honestly, I mean, I think all of you, all of you are investors, and everybody sort of derides, a lot of capital available. I would say, if there is a blank check available, you also spend like a blind, right? So it's not always good to have a blank check from any of your institutional investors who are sort of investing in your company. I think it's always good to have a cautious investor who sort of works with you to build long-term value. So I think, these are good times for entrepreneurs, I would say, much better than 2015 and 16. I think these are times that are forcing us to think about the real problems that we are solving and solve it in the most capital efficient manner. So honestly, I am not at all unhappy with what's happening. I am quite happy about what's happening. And I think it's just making us focus on our core. It's just making us become much better as companies. So, that's what I would do. I would urge all of you, if you're entrepreneurs in the group, to just focus on your core, ask yourself very tough questions as to why do you have a reason to exist. And if you can find yourself one, I think focus on building that and making that larger and larger.
Sure. Yeah, no, I think for all the entrepreneurs, in the audience, obviously, it's a sprint as well as a marathon. I mean, every morning you wake up and you sprint, but, you have to realize that you're running a marathon. So that's very important. And, lucky are those where, they're outliers and things happen for them very quickly. Otherwise, you're in it for the long run. And it also takes time for the ecosystems to evolve. And I think we've all seen the 2000s and then maybe the 2008, now the 2016, 17. But a quick question to, Sanjay and Sandeep. I mean, I know everybody says, I want a large market and then I want a great team, to make an investment, to cut the check. But what are the other things? How do you make your decision? What homework do you want entrepreneurs to do prior to winning your confidence and getting a check from you? I mean, if you were to give them just a couple of inputs. Go ahead.
So for me, while, you would look at all the hygiene factors, you would need every possible, saying that, I need a great market, team, everything in place, right? But it's difficult to find those team with 100% perfection. So you look into that various gaps and saying that, can this be filled up either with capital or with your connection or whatever the mentoring advice which you can give across. So then you get into it. But preliminary, before I invest into it, there are three things which comes to my mind before I say yes to any of the deals. One is there money to be made? Which means that, is the market rapidly growing? Is the market existing? What's the market size? Second one, once I've got that answer saying that, is there money to be made? Are these people who can make me money? Which means the team, the guys behind it, their domain expertise, their wherewithal to execute that idea. And the lastly, how much money which I can make, which means that, what is it, the deal terms, valuation. So three things: is there money to be made? How much money I can make? Are these people who can make me money, and how much money I can make? So this three typically works as a tick in a box. And if there are gaps, then you work with the entrepreneur to arrive at common ground and ensure that, that whole business is aligned both from an investor and an entrepreneur perspective. And then you take an investment decision.
So look, we make a handful of investments, and I think as a result, we're very careful about where we decide to spend our time. Quite honestly, we spend our time doing things we like to do. I think we have one of the best jobs in the world. We get to meet really smart people, really passionate people, and people who want to see the world a little bit differently, and you get to feed off of that energy. So I'd say to start with for us is you just really want to feel the energy. And can you come in the room and just get that passion of why you're going to succeed? Because, honestly, there's not a single company we've invested in the last 12 years that has gone per the plan that was originally laid out. And there's no way that those people would have survived through those downturns if it wasn't for the fact that they were just committed. They were tenacious, they bought into it, and they found a group of people, us in these cases, who just wanted to be along for that ride, and we wanted to really see that succeed. So what we're looking for from our side, and again, this is very different, fund to fund, investor to investor, and the parameters shouldn't be taken as sacrosanct, but I can tell you from our lens, it is, can we really buy into that vision? And can you make me feel like seeing that world would be amazing and getting there would be great, and that you have the energy to make that happen? And I'll tell you the reason why that's important, because you're not going to go down this journey on your own. And so therefore, if you can't convince me of that passion, irrespective of me being good, bad, or ugly, you're going to have to hire people. And it's a ability to really drive and motivate those people during the downturns that I think shows when you're going through this. So as Manish said, it's a great time right now. The world sucks. Get people. If you can convince them to take that chance and come join you, you're going to have some really committed, dedicated people. And I think that kind of happens as a result of it. So that passion is important. I kind of think the rest is academic. I mean, it is. Do you have numbers? Do you have this? Do you have that? But this is the one part that I think gets overlooked. And in people's sort of fervor to come in and make sure that they've relayed all the points that someone told them to put on the PowerPoint presentation, it becomes an academic discussion. And I think don't let it be that, and really let the energy come out.
Yeah. No, also, I think a lot of you can do the homework on investors, before you even go approach. I think in today's time and age, with all the tools that are available, I think while pitching any money is good money, in the end, if you don't have access to money, I think you also have a choice to go to the right set of investors, and doing your homework in terms of their particular domain focus or vertical focus or geography focus, and then pitching to them. And I completely agree with you. I think lots of times, at least in the last 10 years in my investment life, I think the decisions are made mostly in the first meeting. I mean, you're then digging deeper to make sure, because that's just because of the energy, and that's because of, I think the wavelength matching, and you believe and you say that, this team is the team that I want to work with. Now, they all say, I think, during good times, there are no angels, right, left in the heaven, because they're all busy doing angel deals. And And during the bad times, everybody is a private equity investor looking for all the metrics, a lot of predictability. So I just want, your perspectives. Is there a Series A crunch? That you have got a lot of these angels and, seed funds who do up to $1 million to $2 million of investment. And then they're not able to cross the chasm because the guys on the other side are saying, you need to make some more progress before I write a $5 to $10 million check. So is that a challenge at all? Or, Sandeep, Sanjay, Anand, feel free to. Manish, you can chime in as well. Yeah.
Look, I think the country's been evolving, and this is just par for the evolution. Things go up, things come down. When it was hot, everyone's question was, is it a bubble? Isn't it ridiculous? All this stuff is happening. It was, and it's right. I think that there's going to be a new reality, which is lots of people are going to have a shot at building something because there's lots of people who want to see things change. Not every one of those will necessarily get the next round of funding or should get the next round of funding. I think our expectation in the past perhaps was a smaller angel ecosystem, a maybe slightly and commensurately ratioed Series A ecosystem, which allowed for more companies to get funded. Probably didn't allow for as much risk to get taken. I think it's fantastic now that there's many more angels, many more people coming from diverse industries saying, I want to help build these businesses. But that doesn't necessarily mean that Series A is going to go to every one of them or that every one of them should. And I think that as our ecosystem develops, it's going to only be reasonable that there's going to be a new level reached of success or lack thereof of companies getting their next round of funding.
Sure. So while there's a lot of talks about Series A or Series B crunch in that sense, these are all the companies which typically have not hit across right matrices or not delivered on the performance. And in exuberance, while they raised the money, they were at an extremely high valuation. So these are the typical teams who are struggling. But I'll share across a couple of perspectives. Besides the VC, there are family offices who are investing in Series A and B kind of deals. And secondly, we have seen across corporates trying to chip in with if there is a strategic alignment. So these are other two alternative source of capital which is readily available. And in fact, family offices are more patient capital. They help across quite a lot. So I've seen that within my portfolio, things moving well within this two segment besides the VC.
Sure. Manish, you want to chime in quickly?
Given that angel investing is smaller check size, obviously, there are lots of people who are going to invest as angels.
Maybe let me ask this question in a different way to you. If you had an opportunity to raise money again, would you raise, larger chunk even if there was dilution? Or would you still stick with your current strategy of, $3, $4, $5 million now and then go raise more money later?
Honestly, we would be honest to ourselves. If we think that we've figured out what the Purple's, core success and sustainable growth strategy is going to be, then we would end up raising a little more money than we've had. And hopefully we will do that in 2017. But I think if you haven't figured that out, I think more capital is not necessarily good for you. So, if you think you've figured it out really well, and if you think capital is the only sort of thing that you need now to scale up, then, go ahead and raise money. Dilution doesn't matter as much in life, as much as, larger businesses matter. But if you haven't figured that out, I think what probably is going to happen is that you'll end up wasting a lot of time trying to raise capital, and you will not get that capital, at least in the current scenario where, a lot of people will ask you very tough questions. So my suggestion would be, if you have figured it out, go out and raise money. If you haven't figured it out yet, stay in-house, try to figure your stuff out, and once you figure it out, you can raise money.
Sure.
This is right that the last 6 months, 1 year, are difficult for the next rounds of round A, round B. The numbers of deals are less and the valuations are also. But in a way, it is also a very good time in the sense that this is separating the just good from the very excellent from the rest of the companies. And now, which the survivability and the sustainability is the key challenge. And those who will survive and through these times within their resources, within their funds, they are bound to do well, because then they will be they are the good companies. So we are finding that the companies which needs to close down, it's better they close down early. Meaning it's because if they have no reason or so actually these difficult, though there are difficult times, especially for the later series, and mainly because the overseas money, the foreign funds flow is not as forthcoming as it was 1 or 2 years back. And as Sanjay rightly said, that the Indian money by way of family offices or corporates or the HNIs and all those, they are making it up. But then it is more cautious in that sense. But I find no reason, but it's a good thing to happen actually.
Yeah, no, I do think that because of the excess investments, I think there have been Me Too companies created in a lot of sectors. Obviously, they're going to die. They've created confusion for even some of the mainstream players in the market. I mean, that's a fact we all know, but that's going to... Maybe we'll just do a quick rapid fire before we open it up for Q&A. Quick... outside of consumer and fintech, what are you looking at, Sandeep? Anything? Quickly, just.
So I'm intrigued by FMCG, and that's consumer, but nonetheless, it's a different area of it. So.
Okay. Anand?
Actually, our investment is sector agnostic. Anything, any sector which is growth oriented, which can grow over the next 3, 4, 5, 6 years, and whether the founders and the promoters can really deliver through those dreams. So in that sense, we are not particularly for any particular sector.
Sanjay?
While I've been sector agnostic, couple of deals which I'm specifically looking across. One is into home interior digital, digital interior space. That is one FMCG brand specifically for online. It's
so internet first kind of brands.
Right. So online first brands which I'm trying to look up to. And lastly, health tech is something which I'm very focused on.
Sure. And along the same lines, whether it's Brexit or US elections or the protectionism around the world, any impact on India startups?
I don't think so, because we are investing into something which is in IP driven, not services.
Anand, what's your perspective?
Not really. Meaning, it's too early to really forecast and predict as to what is
Manish?
So honestly, for us, what mattered more was demonetization. We cater to Indian.
I'll come to the demonetization, but you don't see the global things impacting at all?
Not really. Personally,
Sandeep?
as a company.
Just to be different, I'll say yes.
Okay.
I do.
Yeah. No, I think so too. It'll have some impact, no doubt about that. Now, coming to quickly demonetization, any impact you've seen? Any advice?
So obviously, November 8th was, and 9th and 10th were difficult. A large part of our business is cash on delivery. What has happened after that is actually, something that we never expected. So, our digital payments have gone up by about 100% since then. What that meant is our working capital cycles have improved, and as a business, we've done really well. So I would say it's been a boon. I think 3-4 days were some pain and some chaos, but I think after that, it's been all good.
Sandeep, what about your portfolio experiences, and what's your take on it? Demonetization.
Overall, so we have a chart that we look at for Bharti Airtel stock price from 2000 to 2008. And roughly, if you look at it, there was the Black Swan event of Reliance launching, which skyrocketed mobile penetration, mobile growth. And in a 5-year period, Bharti's stock went up 25x. So if you held it the 5 years before, you made no money. If you held it the 5 years after, you made 25x. I think demonetization, the launch of Jio last year, are two events that we're going to look back on and look at and say, my God, the whole world has changed. I'll bring out the second one as well, because in Facebook's global earning call, they listed the effect of Reliance Jio as one of the drivers of growth for them. I think across our companies, we've seen the effect of demonetization be positive after a month of negativity. So overall, I think it's going to be a good thing.
Thank you, guys. Thank you all. It was wonderful.